What's going on, guys? It's Hunter, and in this video I'm going to be going over some of the ways you can identify potential in a stock by looking at the bigger picture and capitalizing on some of these different trends in the market. But before we get into it, make sure to leave a like and subscribe to the channel if you find any value throughout this video. You've probably noticed, but when people first come into the market, they instantly move to the popular stocks or what everyone's talking about in their different trading groups, Discord chats, or whatever it might be. And right away, I think what you should ask yourself is, why do 90% of people end up failing and losing money when they first start trading? And for starters, it's because they're all doing the exact same thing and developing these bad habits right off the bat. And second, they're not looking at the bigger picture or trying to figure out what the market's doing as a whole. They're just focused on how they can make the most money right away, usually with penny stocks, by speculating on their different price movements. So right from the beginning, I would encourage you to look at the market from a different perspective. And if you want to make money and be successful doing something where 90% of the people end up failing, you're going to need a different approach. So in this video, I'll go over a few of the things that I've learned and show you how you can make decisions based on multiple factors in the market. So now I'll jump into my TD Ameritrade account and show you some of these different signals and how they're correlated with different stocks and ETFs. So what you're looking at right now is TD Ameritrade's Thinkorswim platform, which is what I use for trading and technical analysis. If you're not familiar with this platform, but you want to understand how it works, I made a video about a week ago going over a bunch of these different indicators and showing you how I use them. So if you want to watch that, I'll make sure to leave a link in the description. Okay, so here's what most people will do when they're looking for stocks to swing or day trade. They'll go up to a stock scanner like this, and then they'll scan for stocks with either high volume, certain percentage change, something making new highs, or whatever the criteria might be. And then once they find something that fits their criteria, they'll go back and then check out either their 6-month or 1-year chart just to try to do some form of technical analysis. And they'll look at something like this and say, hey, this stock's been in a nice uptrend for the past couple months, but has recently had a big pullback from its high. So this looks like it could be a good buying opportunity. And with stuff like this, when people find stocks from scanners, they're really just going off a broad form of technical analysis. And they're probably doing 0 to very little research on the stock or company, and they're not taking other factors like market volatility or the volatility of this specific stock into consideration. And say you ended up buying this stock's dip right around this area, you would have had to suffer a over 20% loss just before you saw a rally back up to this previous level. So there's nothing wrong with technical analysis, and something like this might work out for you in a bull market where there's very low volatility, but I wouldn't solely rely on it. And looking at these different time frames could definitely help you identify potential entry points, but you should really only be doing this if you've done extensive amounts of research on the company and stock. So instead of scanning and then investing in a bunch of random stocks, here's another way you could go about it. So I try to have more of a macro outlook and take a bunch of different market factors into consideration that will then point me in the right direction of a certain stock or index. For example, right now, a clear trend in the market is inflation. And this is obviously something that not a lot of people are talking about, and most people probably don't even realize it, but this is definitely the things that institutional investors and big hedge funds are capitalizing on. Here's the 1-year chart on the US dollar, and you can clearly see that it's been breaking down for quite some time now. And since inflation is generally caused by a decrease in our purchasing power or the value of our dollar, you can then ask yourself what types of stocks or indexes would react to this. Well, things like commodities will naturally start to inflate as they're priced in dollars, so when we see the dollar drop, their prices will start to increase. So now that you've identified a big macro trend, you now have a better idea of what sector to focus on. If you don't know what commodities are, you can check out the CRB index, which tracks and will show you a bunch of different commodities and their ticker symbols. So then you can start going through and see which ones have had the best reaction to this trend. And now I have a chart of the US dollar on top, and then on the bottom screen here, I have ticker symbol CPER, which is copper. And you can clearly see that they have a very strong inverse correlation, meaning that when the dollar sells off, it's bullish for copper. And this is something that really nobody talks about, but you can see just in the past couple months, copper is up nearly 30%. And when you find big macro trends like this, like the dollar breaking down here, it's a lot easier, in my opinion, to identify value in different stocks and ETFs, especially when they have very high correlations. And when things have such a strong correlation like this, if you're looking for a buying opportunity on copper, one of the main things you would look for is something like this, where the dollar has a bounce up and then starts to consolidate. So you can see when that happened here, it started to reverse and continue to break down. So that would have provided you with a buying opportunity when the dollar stops going up right around this level. And I think this is a much more efficient way to determine entry and exit points. Now, say you were looking for a spot to either put a stop loss or just a spot to cut your losses in general. You could go up here, then determine the overall trend that this is trading in. So then you can see if it started to break out above this area and continue to push higher, that's when you can cut your losses. So copper is just one example of a commodity. Let's take a look at ticker SOYB, which is soybeans. Now, most people probably don't even know that this ETF exists or have any idea how it trades. But as you can see, it's very similar to copper and has been trading as a clear inverse to this dollar. And this is definitely not something most people are paying attention to in the market, but just like copper, you can see that as this dollar has continued to break down, these are up over 25% in just a couple months. There are a lot more examples of commodities that have been trading like this in the CRB index if you want to check them out. But I just wanted to show you guys these two just to show you how powerful it can be when you identify a big macro trend and then find sectors and indexes that perform well based off that trend. I'm definitely going to be doing a lot more videos like this in the future. So if you guys enjoy watching videos on technical analysis or me kind of just explaining different trends in the market, make sure to leave a thumbs up and subscribe to the channel. I'll be posting here every single week. So I'll see you guys next time.